Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Nestle and the right price for it to buy. A lot of people on YouTube have asked me, and also on Patreon have asked me as to when to buy such stocks like Eicher Motors, Nestle, etc., which are very high price stock notionally. So 11,000 to 12,000, now 14,000 rupees stock Nestle. Let's understand when one should buy this and what should be the strategy. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Now about Nestle India. It was formally established in 1959, although its relation with India has remained quite strong, and they started operations in India in 1912 as Nestle Anglo-Swiss Condensed Milk Company Export Limited. And after independence, because India nationalized the food sector, the agrochemicals, agro tech sector, as well as the milk sector, Nestle needed to make an Indian, not a subsidiary, but a Nestle India as a separate company. And that's what they did post independence. And they started manufacturing food products such as the milk products or chocolates, etc. From 1961 onwards, the first factory in India was established as Nestle India in Moga, Punjab. And from then onwards, they have never looked back. And we know how big a brand Nestle is in terms of chocolates and milk products, etc. We know about their brand of Milkmaid and so on and so forth. Manufactures top quality chocolates and milk products, and it is the biggest brand in its space. People say Amul is a very good competitor. Yes, it is, but currently the biggest brand in India is Nestle in this space. Has been a market leader for many years. At least for the last 25 years, I have noticed that Nestle has grown from leaps and bounds in that period. If we look at the financials of the company, and we look at say the FY, this is FY20 numbers compared to FY19, not FY19 compared to FY18, so kindly take that into consideration. The FY20 numbers, if you look at, is the sales have grown by 9.6%. The profit growth has been 33% owing to lower tax regime of the Indian government for the companies that were paying taxes higher than 33-34%. So that helped Nestle put up a very good show of 33% profit growth. Otherwise, they would have had a profit growth close to 20% or so, which would not have been bad considering the current slowdown in the pure consumption sector here in India. Most of the companies are having single digit or lower single digit or even negative growth in consumption. We have seen what Colgate did a couple of quarters back. So Nestle is doing very well considering or compared to other companies in the FMCG sector. The return on equity is pretty tremendous at 43%, and this is why it commands such a valuation even at this point of time. And the operating profit margin is more than 30%. So why is the euphoria for such a stock like Nestle? First of all, is about moat, and I have talked about moat many times. Just to tell you in a nutshell, moat is for any company is something that it has a competitive advantage on any other company in that industry, and it has something in that product that would keep on growing over a period of time and will keep on churning revenues and profitability for the company. And this company has that moat because this company has the leadership in the product segments that they are producing, and they did not venture out to produce biscuits or other products or gone into other food things, etc. They concentrated on milk, they concentrated on chocolates and kids products to attract kids towards their products, and they maintained high level of quality, and that has meant that Nestle became a market leader in this space. Over the last 60 years, it has performed exceptionally well. The return ratios has been pretty magnificent, as I just mentioned, and the management is very investor friendly. We have seen how good the dividend they are paying. For instance, in 2016, when the stock fell to 5,000 rupees, the dividend did not fall, although the sales fell. And if you look at the current dividend is 115 rupees. And if you look at if you see that 5,000 rupees was the price about 3.5 years back, and the stock was giving a dividend yield of 2.5%, 2.3%, which is quite unbelievable for a company growing at 35% year on year to have a dividend yield of 2.3%. It has continuously given very good dividend. It has continuously looked at increasing shareholder wealth and the kind of business that it is into, which is chocolates and condensed milk and so on and so forth. Longevity of business is like perennial, because this is something that would be required all the time. It is like Colgate is selling you can say toothpaste, or Britannia selling biscuits. It will continue to sell no matter how big the slowdown would be. Yes, for sure, the quality is selling at premium, but all the stocks are selling at premium. You look at DMart, you look at Colgate, you look at Britannia, Gillette, and so on and so forth. All the stocks are trading at 70, 80 times, and so is Nestle. Now we come to the most important part, which is the valuation assessment. Currently, the stock is trading at a PE of 76, which is not very expensive, but slightly expensive, I would say. But 76 to 80 times over the last 8 to 10 years, I have seen Nestle trade at for a longer period of time rather than below it. The bear case PE, if we look at nearby, has been 52, which was during the 2016 Maggie crisis, as I just mentioned, when the stock fell to 5,000 rupees from 7,500 rupees. That was a major fall in a quick duration. But we cannot expect such valuations again unless something really bad happens to Nestle products. So what I have noticed that around 60 times is probably you could expect the stock may fall if a crash in the market comes up, and that's what I expect at 12,200 Nifty, that the stock market may fall about 10 to 15% the Nifty, and in that scenario, Nestle could come back to a valuation of around 58, 60 times. So if we say market falls big next year, Nestle may trade at 58 times 2019 earning. Why I am saying December 2019? Because that's how their earnings are published annually and not on a financial year basis. So next quarter earnings would be having also the yearly earnings of 2019. So if we expect 2019 EPS to be around 200 rupees, then at 58 times you could see the stock trade at around 12,200 rupees. So any dip of 10 to 15% from current levels is a big buying opportunity. Don't look for levels of 10,000, 10,500. They may come, but start buying from 12,500 levels, or you could buy straight away at this moment as well, probably one share in a month, and keep on adding. That is extremely crucial, because this is not a stock that would make you a lot of money trading, but this will make you a lot of money if you invest for the next 10, 12, 15 years. So if you look at the stock technicals, currently the strong support of the stock comes at around 14,100 levels, and the next support is around 12,500 levels, 12,500 levels. I believe that if a fall comes in the market, then the stock may trade between this 12,000 to 14,000 levels. Anywhere close to 12,000, you go ahead and grab Nestle, because I have seen that even when the market falls a lot, people get into buying Nestle after a relative fall. So a relative 10 to 12% fall is what they look for, and then the market starts buying into such companies as Nestle. Is currently trading at 23 times book. That is expensive, but again I'm saying that these companies have always traded at 70, 80 times, so take that into consideration. The stock has already run up something like 3 times from its lows of 2016, which was 5,000. So close to three times or nearly just over three times in about 4 years is quite a big move for a large cap company. In this, the stock is a 1.4 lakh crore, which is a large cap company at the moment. A nifty company to go up 3x is quite phenomenal, and that's why I expect in the first half of next year a major correction in Nestle India. So wait for that major correction. When I'm saying major, it could be between 10 to 15%, could be more, but at least 12 to 15% correction could come in into Nestle, and that would be a big opportunity to buy. The big breakout will happen from 15,100 levels, and we could see 17,000, 17,500 levels in the stock if that happens, but that looks highly unlikely because of the already big run up that has taken place over the last 4 to 6 months. You can buy at these levels as well, probably one share, and look for declines to buy into the company. Make a big position into Nestle India of at least 10 to 15 lakhs if it is possible. Over the next, if you're doing an FD rather than do an FD in this stock, and over the next say 2 to 3 years, make those big positions and wait for 2030, and you'll see the magic of how these companies keep on surprising, keep on growing like anything. We have seen MRF at 10,000. I have seen MRF at 10,000, 8,000 levels, even at 5,000 levels in 2010-11, and it went up to all the way to 60,000 without any splits or bonuses. Yes, it is quite a, you could say, a commodity stock with the rates of rubbers and so on and so forth, but it is also a consumption stock with the biggest tire brand and related to autos. So a similar passage may happen with Nestle. A similar passage has taken place with Aisha Motors. These are companies not to be sold at all, and you need to buy and buy big over a period of time. Don't look at stock prices. I'm again saying, don't look at a stock price, look at the valuations and then assess whether you need to buy or not. So what needs to be done? Well, I believe that you need to buy close to 14,200 levels. That's the first thing. So any 2-3% dip from these levels, go ahead and buy the first lot or at least one or two shares. It is a generational stock. I am saying again, it is not a trading stock. It is very difficult to trade such stocks. It might not give any movement over 2-3 weeks. It might give you negative movements over 2-3 weeks. But when you look at the charts after 3 years, 4 years, you will notice how the move has taken place in the stock and how it has grown by leaps and bounds. So look for falls of 15-20% or greater to accumulate even more and buy big. It is very hard to trade, I'm again saying. So invest into this company over a period of next 3-4 years and hold for at least 10 to 12 years to see the magic of compounding. So this was my video on Nestle India and when to buy it. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.